Hey, it's 10:38, May 19th, 2012. We're looking at the 1-minute chart for Facebook on the first day of the IPO. RSI is set at 14. You can see we sell off $2 and we drop down to exactly 38, where there's defense by, I guess, JP Morgan, that was the underwriter. They were buying it at 38 as they were in the afternoon, which we'll see. RSI is calculated from an end-period exponential moving average of the ups and down closes. So we don't get in a new issue an RSI signal until the 15th bar, because we need 14 units before to give us the average, to then compare the current close to that average and work out the relative strength of its price in terms of where it was in the past. It's just a momentum oscillator that measures the rate of change in price. So when there's divergences, it means there's a deceleration of price. So the first time we get an RSI signal here is at 4.65 at 450 here in England, and the next RSI value is 7.64, so it's up plus 3%. And while price is, because RSI is worked out from price, RSI usually follows price until there's a divergence. So while price was flat, RSI should have been flat, but it's up 3%. My backtesting shows that more than 5% is a valid signal to be the leading indicator for a price reversal, which is exactly what RSI does. So here we see Facebook on the first support level at 38, which is the IPO price. This is where we could expect a possible price reversal, and we have a divergence of 3%, although it's less than the 5% needed by my criteria to purport that it's a good signal for a price reversal. But if we switch RSI from the 14 setting down to, say, the 7 setting, then we might see a divergence. And I never thought of doing this on the day of the IPO because I'm not that tenacious with the RSI, but at the first candle at exactly 38 bucks at 450, RSI there is 3.8, and now you can see it's 7.88. So it's exactly a 5.5% bullish RSI divergence when the indicator is set to a 7 end period calculation. But I don't use the 7 period, so we got to stick to the 14 period. So you can see that that was the first ever bullish RSI divergence signal in Facebook on a support level. And on this day, there was no technical levels, meaning no pivots, no trend lines. There was only a limited number of possible support and resistance levels. One was 38. The second next created resistance level would be a high, then a retest of that high. So that would be its first resistance level. So I know Google Finance says the high was 45 bucks, but that could have been trades that were put through at that price because of the problem with matching orders, I guess. But if we take a horizontal level here on this afternoon high, it's at 41.82, and if we scroll ahead, I'll show you how price interacted when we tested that new resistance level. So here's the high for the morning, ignoring what Google Finance says. This is just a high by my chart, and all the different charting packages from the different brokerages charted Facebook differently in the 1-minute chart, because some of them had really long wicks, which could have been orders that were cleared, or they had information on the clearing. I'm not really sure what I'm trying to say, but here's the next double top. Well, I already showed you what happened, so let me scroll it back so you can see it as it's set up, because I don't like showing you the future. You already saw the future. So let's ignore that big red candle there, and let's just scroll the chart ahead to when we get the double top at the first resistance level, which I'm assuming is 41.82. So there is our first double top. Oh, there's a lag with my chart, so I've just pressed it a few times. So you just got to use the Men in Black trick and erase your mind, pretend you don't know that Facebook dropped right there. I just trying to set up the chart where it should be, and I hit the wrong button and I mucked up. So in that time frame, at the high of the afternoon, the bearish RSI divergence was, I think, 4.7%. So yes, it's not my 5% that my research shows makes it a valid signal, but it was still a weak signal. So I'm just labeling the peaks of the RSI as they need to be labeled. So with a double top, you take the outside candles that form the perfect parallel double top, and you take the corresponding RSI values, and usually you have two peaks in RSI that correspond to those two price peaks. And generally when you connect the two RSI peaks with a trend line, in most cases that trend line isn't crossed by other RSI values with a really high quality double top. That doesn't happen all the time, and it's not important to the signal. It's just a little bit on the aesthetics of what the signal more than often looks like inside that indicator. So what is important is the subtraction of the RSI peak. So here our RSI drops from 64.1 down to 59.4. So we're down 4.7%. So that was your second point to sell short Facebook if you were brave enough to just trust the double top divergence at the first resistance level, which is where we could have expected a price reversal. And then Facebook sold off for the rest of the day, and I can't show you the rest of the chart, but it drops down, and there's one more bullish RSI divergence that occurs at the day low. So I can drag this into your frame so you can see it now. I think I found a way to just change my chart, because I've got my screen capture frame only laid out on half of the screen, so I was working. So here you can see a new day low, and we'll clean up the RSI indicator. We'll get rid of this trend line we don't need and this fake horizontal level, and I'll connect the RSI peak. So generally I take the most significant low peak on the way down. Usually it's the most recent, but there, because there isn't, okay, even if I take the most obvious price peak, which is my methodology, their RSI is 15.3, and here at the lowest of the low, when RSIs diverge by the most, are if I connect the RSI peaks, we're going to see a bullish divergence. And of course, as price dropped down to the second support level at 38, we're going to have an anticipation of support, and that's why the rate of selling has slowed down. So you can see the bullish divergence is now 15.3% there, and there it's 25.8. So it's like a 9.2% bullish RSI divergence. If I just did a subtraction right ahead, I'm just being a total wall. I don't have a calculator. I just kind of guessed roughly what the divergence is. But let me tell you exactly what it is. So there it's 15.33 minus 25.79. Oh, it's a 10.2 bullish RSI divergence, not 9.2. And so my prediction is that on Monday, Facebook, given the second test of the support level and the 10% bullish divergence, it's going to open strong on Monday, and we'll have a rally on the open, regardless of what happens later in the day, given the market sentiment and what's going on in the rest of the market. So that's a little bit on the first three RSI divergence signals that occurred in Facebook. Obviously, the first one was on a double bottom, not a perfect double bottom. It was more of a support zone because we didn't have two nice peaks. The second one was a double top on the first resistance level, and then the second one was just a basic bullish RSI divergence at the test of the second support level. Well, yeah, it's psychological, and it's the first test of a support level. So we're not going to get a possible cluster strategy, and all a cluster strategy is a day low on a trend line that's going to be the third or more test with a horizontal level. So I'll bet you the first cluster strategy in Facebook isn't going to be for a week or two until we have a little bit of a trend. We could have an intraday trend and see this on a micro level, but in terms of a more longer term time frame, we're not going to see a nice trend or any structure in the longer frame Facebook chart, because it's just going to be choppy and chaotic while the market figures out what the valuation of this company is, because it's 107 times like earnings, or it's way higher than Amazon. It's absolutely a diabolical valuation for Facebook. I think in 6 months it's going to be half of 38. That's my prediction, because I just can't understand why it's such an expensive company. It's just retarded, really.